Important key points of this lecture includes bank reconciliation statement, need for bank reconciliation statement, causes of differences. Let's start. Bank reconciliation statement. Bank reconciliation statement is a statement which contains a complete and satisfactory explanation of the differences in balances as per the cash book and bank statement. Need for bank reconciliation statement. It reflects the actual bank balance position. It helps to detect any mistake in the cash book and in the pass book. It prevents frauds in recording the banking transactions. It explains any delay in the collection of checks. Causes of difference. Number 1, timing. Number 2, transactions. Number 3, errors. Number 1, timing. There may be a time gap between recording transactions in the customer's book and bank book. For example, when a check is issued to a party, it is recorded immediately in the customer's book, but bank will record it only when it makes payment against that check. 2. Transactions. For some transactions, the bank has earlier knowledge and it adjusts its records before the business. Some differences may arise from the bank's action that have not been intimated to the customer. For example, interest credited by the bank or bank charges debited by bank. The customer comes to know of these transactions only when he receives the bank statement. 3. Errors. Some differences in balance may arise owing to errors committed by the bank or by the person responsible for preparing the cash book.